The number one question everybody's asking about markets right now is, have we just seen the return of the bears? And between February and March, we do tend to have that weakness, with super micro stocks selling off over 20% and small caps becoming so volatile. It's easy to see why people are drawing those conclusions. But can these stocks actually recover? And more importantly, what happens if Nvidia's earnings don't live up to expectations? Only a few days away now, we will see whether we have a buy the rumor and sell the fact. So with seasonality just around the corner for the S&P 500 and key levels to be looked at, and of course a skew crush like no other happening in markets right now, there's so much to discuss in the special weekend edition of Stocks, Commodities, and Cryptos Around the World. Well, welcome back everyone to the Daily Show where we talk about markets around the world. My name's Tom and we've been running this show for over 3+ years together. If you love macro, lead indicators, and the hottest charts from around the world, remember to subscribe and smash that like button if you find value in today's video. Let's get ahead though, because this is a massive show today with some huge data points that I think you'll enjoy. And as we talked about over the last 2 weeks, we've been discussing the idea of rotation occurring in markets. More importantly, the Mag 7 or Mag 6 have not been performing very well. And you can see this is a huge shift in market sentiment that could be bringing out the breadth, but seems to be showing that there is some inherent volatility underneath the market levels. So why are we seeing this? Well, volatility is actually rising as the markets are also going up, a pretty rare thing. And when we tend to see this, we know that we have some stats. Let's take a look at how bad it actually is for the markets. And only 31% of the time when we saw similar reads to this were we actually bullish over the next 2 weeks. That leads into some seasonality data that we'll talk about later on today's video that I think you'll find quite interesting. Another thing is it's been a while since we've seen a dip. If you think these markets are crazy or insane or maybe even mental, then you probably would be correct in some ways. This is in the top 25 streaks of all time. And of course, we have actually witnessed history in terms of how many weeks have been bullish. 14 of 15 weeks have been bullish, which is a big deal. We've never actually seen a read like that. So with everybody saying the markets are so great, what are the concerns? The big one has to be what really many people believed was driving this market rally. Back in October, this is how the yield curve looked. And we shared this over on our X profile, links in the description down below if you want to check it out and save it. Another thing that's happened here is interest rates have made a huge shift. This is where we are at now, and this is where we were when we were rallying up even harder. So the idea of getting more rate cuts is not currently in this market. In fact, it's higher for longer. And you could say that's a positive because, of course, the markets are showing signs of good earnings and strength, but it really is in those AI stocks. And specifically, 6 stocks of this S&P 500 have been doing incredibly well. Let's talk about one, though, that's in the Russell that's been going bonkers. And we reported on this and talked about it, which was super micro computers. Of course, it went over 1,000, squeezed after that to 1,030, hit a 99 plus RSI, which is incredibly rare, and then proceeded to lose 20%. We'll look at the chart later on in today's video, but we drew similarities between that and GameStop, and obviously it didn't end well. What I expect, though, may surprise you, and we posted over on our X account some thought processes here. Now that we've seen over 20% fall in one day, or over 15 really, we generally see a couple of scenarios. And one of those scenarios is not that it's likely to be a super bull market anytime soon. Somebody's probably sold this stock and they've sold it in a big way and they've said, you know what? I'm locking in those profits. Let's get out. That was a great run. We tend to see a few scenarios play out here, and generally we may fall a little bit more, but we do see BTFD. Most retail traders will be looking at this as a massive opportunity and they'll tend to buy the stock back up. But here's where things get changed. It's either going to be most likely a 3 to 6 month pullback in time, which is where we see basically consolidation between a large range, or we might see a pickup in markets but further selling to push down for 3 to 6 months. I would not say this is the stock that's going to actually blow the lights out anymore. Let me know if you agree in the comments down below as well. I'm interested in your opinions. But in general, they're kind of the stats that we see. Speaking of stats, we've got some new insights about CTAs. And as you may know, CTAs are pretty important in these markets right now. Take a look at these actual projections, and they're not that great for the markets. So in terms of CTA strategies, it looks like they've kind of topped out. Most reports, most algorithmic kind of predictions are either saying sideways, slightly up, or down in a big way. And I think this is important because, of course, we have been looking for CTAs to show us the turning signs for a while. In recent spikes in markets, when we've seen CTAs turn towards the downside, it's been pullback time in markets. And of course, we've been looking at that as they're overexposed right now, specifically to the largest tech. So how does it look? Small down prints over the week. And we'll be reporting throughout this week and the coming weeks if anything here changes. But you can see that's the NASDAQ and the S&P 500 also reaching all the way back to those July figures. If we start to see selling of price action along with the CTAs, I think that's where we should be starting to get a little bit worried, or at least expecting a larger pullback. So let's now talk about skew, because of course call skew is getting pretty wild, actually now entering into the almost inverted territory. The last time we saw this was the back end of 2021, and that of course didn't really end very well for markets. It's more about the overall skew crush though, which we'll look at later on in today's video. So let's now talk about this stat as well. We brought it up in our previous video, which was the New York Stock Exchange 90% downside swing we saw after the inflation figures of the week. Now, when we saw that and it was within 3 sessions of the record high, we have a couple of data points from the past that show either pullbacks in time or actually some kind of pullback across the market. And there are so many of these data stats starting to come through, including some seasonality here, where you can see during normal presidential cycles, specifically if we have a sitting president running, we tend to see a weakness over this period of time. Considering the euphoria, considering the bull market that's kind of coming through here, it would make sense to maybe see some sell-off. But let's just hope that it isn't this one. Of course, some people out there would be hoping for it. And this is the correlation with that market that you've probably heard a lot about in the past, 1929. A correlation matrix of 0.94 is hard to really ignore completely when you're talking about correlated markets. And we find ourselves right here, right now, which obviously was the beginning of a huge sell. Will it be the same? I doubt it, but it's of course something we'll be looking at. Now let's talk about accelerating global growth. This is of course one of the bull cases for the markets right now. And realistically, this earnings season has mostly been really positive. 80% of all tech stocks have been performing positively across the board, and most of the big stocks have performed to a point where they've beaten expectations. That's leading into a market that is buoyant, and if we end up seeing any bad earnings seasons this year, expect huge amounts of forward PE to get cut off. That's going to be a big thing to watch. So every earnings season, I would expect to be incredibly volatile moving forward, as there's so many things on the line, including the pace at which the Fed will actually have to cut their rates. I've said this a few times before, it's worthwhile probably snapshotting this screen so that you can see slow cycles versus fast cycles. Remember, central bankers out there never rate cut out of the goodness of their heart. They do it because they broke something. So if they're doing it quickly, they're freaking out. And that usually means they'll overextend, sure, but they've broken something in the back end. Another sign of this may be happening is if you see a really fast rate cutting cycle with, let's say, 1 year after a vol ratio hits lows, which we're getting close to at this point, we might actually have to be a little bit more concerned. So all of these things are starting to come into this market, and they have us just sitting on the sidelines, waiting, obviously using the correct risk management techniques if you are trying to short the market, being probably options, and paying attention to your longer term portfolios as well. Now let's talk Russell 2000, because of course we just saw a 4% sell-off, then come back in 2 days. So basically a 4% sell-off, which is considered pretty large, came straight climbing back up. Now we have seen it before. It's been in points of, let's say bottoming markets or getting close to the bottom, but it often does kind of float around for a while, creating an accumulation base. So we have seen that stat. I thought it was worth mentioning for the week ahead, because of course the Russell's been what we've been talking about for about a week and a half, as we're getting a huge discount to the S&P right now, with the smaller stocks still looking like potentially good buys, while the big stocks are getting rotated out of. A lot of this is going to come down to, of course, interest rates. Do remember the Russell 2K is incredibly susceptible to interest rates. If we see interest rates coming down, I'd expect the Russell to go up. If we see interest rates pumping up, expect the Russell to sideways even go down, because it's not going to do well in a rate hiking environment if we continue to go into one. Divergence in breadth is, of course, what we're discussing here, but the Russell is starting to improve in that. And do remember, if you've been watching the VIX, because of course the VIX is starting to spike through, that 15.5 to 16 ratio is going to be a huge closure, because this is really showing us that the market is actually starting to get volatile, and it's probably going to be pushing through that magical 20 moving average, which we'll go through later on. Being at a 5,000 level as well, it makes sense that we usually would pull back. We pulled back before, just before 4K last time. 3K was too much for the market for a while. And of course, 2K also saw a pullback, which we've talked about along with that FOMC meeting stuff. So are there opportunities for bulls out there right now? Well, of course, small caps certainly offer opportunity. Big caps look pretty bad right now. And China's stock market might be bottoming off. And we've mentioned this now for a while. And I know a lot of you in the comments don't agree with me on this one. But so far, so good, actually, for the Chinese markets. A breadth thrust only a few weeks ago showed us that the market was starting to potentially turn. And here are some other interesting stats that I thought you might like. Panic breadth composite over here, you can see a record high in panic breadth, which often does lead into a bottoming market. Let's have a look at the stats for this. 100% of the time, now of course we don't have that many reads, so it might be insignificant. We saw 1 week later markets actually bouncing up. Then over a 12-month period, we were also 100% of the time bullish. Now again, not many stat data's there, but something that's interesting that goes along with our other thought processes. Now, a lot of you pointed out that China has a massive problem with demographics, in particular, their aging population. I totally agree with you, but of course, we're not looking necessarily long picture. Possibly we're looking shorter picture with the data stats. And this is what I'm getting at. In terms of the Lunar New Year, we often see a bit of a spike in the Shanghai Composite in particular. We also do seem to see some strength come through when China always replaces their main regulator, which they've done a few times before. And you can see here, when it comes to these CSRC stats, we do end up having a pretty bullish kind of run after that does occur. So all of this leads into everything that's going on in the market in terms of sentiment. We've seen defined outcome funds coming through, often a sign of bearish markets turning, and all of that type of stuff is leading into some great TA, which we've got coming up later on in today's show. But let's discuss the elephant in the room, because clearly it's NVIDIA earnings. Every single person that loves stocks, trades stocks, even doesn't even care about stock market has to be watching NVIDIA this week. This stock has really driven the last kind of 12 to 18 months of growth, and it is the linchpin of AI. If it can't hold up to the lofty expectations it has, then get ready for a market that's going to get pretty red pretty quickly. And NVIDIA's earnings is coming up Wednesday after the close. So make sure you stay tuned for that one, because of course the options market expects it to be massive. And I mean massive. 11% on $1 trillion stock. Can't remember the last time options actually has shown something like this. Maybe Meta once or twice. But it is 11% plus minus expected move out of NVIDIA. At the moment, the trend's up. But if it doesn't hit, can you imagine how bad it could get? And that could be the end of NVIDIA's bull run, realistically for now, and possibly an opportunity for many of us out there if you're looking at getting into a quality stock. Because let's be real, NVIDIA is a damn good quality stock. Massive earnings this week, guys. Options market, what's going on there? Well, as we know, 5,000 is a huge level. We closed just underneath 5,000 this week at around 49.90 something. And that really leads into the idea that what happens if we get through that 49.20 and, of course, 48.80 zone. Now, we've already talked about that's where we go from a positive gamma situation to a negative gamma situation. More of that coming up this week, and we'll get some new data for you so you can check that out. Another one is Tesla. Take a look at the 200 strike rate. This is all expiration dates. And if we get through 200, it could really start to get very, very strong. So as we've talked about, this is a pretty big point here for Tesla, and it's starting to look a little bit more bullish. Remember, Tesla's totally disconnected from the market at the moment. So it could go bullish even if the rest of the market was going bearish. More on that as we look at the TA later on today's show. And it's been pretty slow for volume, so I haven't really seen too much, but I thought it was interesting to see some of the energy ETFs getting some nice trades around these zones and then leading into bullish moves. Now, with US oil and Brent both breaking out, suggesting that yields could be going up across the board, this is a fairly big deal. And of course, it's something that we will be watching together. Let's now talk rotation, because it has been a pretty interesting 5 days. And as we mentioned, the last 5 days, we expected semis to underperform, tech to underperform, and realistically things like solar, things like anything to do with the Russell and just markets that have been beaten down recently to perform better. And that's exactly what did happen. We didn't see a huge defensive move like you would usually see before bear sells, like utilities, staples, and healthcare being number 1, 2, 3. But we did see that rotation. And on Friday, it was more of the same. There were some sells in some of the good markets that we've been looking at. I would say it was an overall kind of like bull into bear kind of market that happened through, of course, PPI selling everything across the board. Now let's talk S&P 500 and central bank injections. We haven't seen too much injections going on. Little bit of an uptick. This week is FOMC meeting minutes, so we'll see what they have to say, but not too much on that chart. US 10-year, US 2-year yields, all of these breaking out to the upside, suggesting that there might be further yield kind of issues ahead in terms of going to that 4.5. And of course, on the 2-year, we've been discussing the idea of markets going up to the 4.7, which they actually hit. 4.73 was hit and then sold off. So an interesting point there. If we get through this level, then we're going to probably 5% on the US 2-year, which I'm sure will break the back of this market's bull run, as that's a pretty big deal. Let's move over to treasuries. The little weird island reversal didn't work, as we suspected. It was a pretty bad zone for it. And I kind of think if we get yields increasing, of course, treasuries will suffer. Overall, the next 6 months, next 12 months, I think will be pretty good for treasuries, but they kind of hold in the middle of limbo land. No direction on those ones. One that we did like, though, quite a lot was copper, and it came back in a big way over the last 2 trading sessions. Nice movements from copper, obviously no 395 breakout, but it looks like it's kind of trying to get that big move coming through on it. And this, if it does get through 3.95 and 4, is going to be a big deal for markets. We've also seen home builders kind of start to slow a little bit, which obviously has been a huge mover in markets. I don't know what it's doing. It's still bullish in the overall price action, but I probably wouldn't buy it up here. Let's just say that. We will be watching home builders and transportations this week. When we move over to the US dollar, it was overall still holding above those zones, still holding above 104. And you can see here the 20 moving average in particular being an important point. So if the US dollar does fall, we're kind of expecting maybe it'll find a bouncer there to the 105.80 that we've discussed now since the breakout occurred. An interesting long leg doji on the weekly, but still a nice closure for it overall. Now we move to oil. Now, Brent and US oil overall very strong. Huge breach out here for oil, suggesting that we're going to 82 to 84 a barrel. And again, that's suggesting the inflation plays back in play, which is going to be necessarily probably bad for the markets and good for energy stocks and good for those types of things. Now, if you look at UK oil and you put Brent onto your charts, you'll notice it has a really nice accumulation base on it, much stronger actually than US oil across the board. But it did come into that resistance and kind of fell or just like held that zone. So if we see UK oil breakout as well, even stronger overall for the oil market. Looking okay there on the charts. Gold, who knows? It's reacting interestingly. Considering yields haven't dropped that much off, I'm surprised gold is rallying a little bit, but 2034 remains the big key area. Even if it does rally up, this is probably where the bears will sit this week. A key zone to be watching on the markets. Let's now move over to Tesla. Now, Tesla did a good thing, but it still didn't manage to get through 200. We breached out of the 195, which is a huge deal. We know 200 has calls all over it, and things start to look a lot better here for Tesla on the smaller timeframes. If we go down to a daily, you can see here a daily closure above the 20 moving average. Obviously still a gap to be filled here to 207 and already an inverse head and shoulders on the smaller timeframes such as 2 and 4 hours. So it's looking a lot better on that chart. RK, anything to do with the small caps, they are actually looking a lot better on the tech side of things. Even Bio's been doing better. TAN, PBW, Clean Energy, all those things, they've all been doing better. So this actually closed pretty strong. Long leg doji overall, but based on the previous week, it kind of did what we thought, which was find some buyers. Now we move over to SMCI, though, so everyone's discussing this stock. And I'm sorry to tell bulls here, that's brutal. That is not good. So while I do think that the market might even go down a little bit and then return back, who knows, might even return back off this, there will be a lot of people excited about buying this thing. I don't think it's going to a new high though, or if it does go to a new high, it won't be long lived. And that's because generally speaking, this is a large seller. Somebody came out and said, you know what? Thank you very much for your sweet money. And I'm getting out. Big volume, big sell. And this all has those game book plays on it. So we knew it was going to be volatile. And funny enough, I put it on the video. I said it doesn't end well generally. And then negative 20% comes out the next day. Maybe I'm a spook for this market. But yeah, certainly a large sell-off. I wouldn't be surprised at all to see buyers come back in. We will be monitoring it very closely. We'll go give the key points as we start to see structure build on the low, because I do expect it to bounce a little. Let's move over to TAN. So, of course, solar funds doing a little bit better recently. Weekly, not much to write home about. It just kind of closed like ARK, long leg dojis, not worked through the weekly 20 or anything like that, but still showing some signs. Now, NVIDIA, as we know, the trend is up. Overall, everything looks quite good. Couple of days now where it's sat by itself because we know 750 is a call wall. If we do manage to get through 750, we could really rally for a little bit longer. But everyone's been calling now 1,000 for the stock, 1,500. I've even seen some people say 3K for the stock. You know, do think about market capitalization, guys. 3K is a bit insane right now, as that is already at 1.8 trillion at 700. It's just too much. But people are calling these wild amounts, and in general, that usually means that you're past, well, you're kind of getting close to the end of that particular rally. Now, don't get me wrong, NVIDIA's probably going to be a $2,000 or $3,000 stock eventually, but this is a big earnings season for it. So I'm going to be on the sidelines reacting to this and not necessarily predicting what it's going to do from the earnings side. From the investment side, of course, I'm going to keep holding it through the earnings because it's what you do with this stock. But it's different. Investing and trading is very, very different. So it's going to be risky. There's a lot going on, and 750 will be one of the key points to be watching. Let's now talk Chinese indices because, of course, before we go into the US ones, this has been a good turning point. 16.5 almost up here for the Hang Seng, CQQQ, KWeb, all of those ones improving across the board. A very decent sessions, or a couple of decent sessions coming through on it, and I think pretty nice weekly as well when it comes to the closure. So starting to look a lot better, not through the 20 weekly moving average just yet, but a big zone coming up for it, and it could get kind of volatile moving forward, especially in the bull side. What about the Russell 2K? Well, it closes, I think, a pretty good week, so that's not too bad overall. Obviously not through that 2080 line, 2090 line, which is going to be a huge breach out because that exposes 2250. But overall, the market held. You'll notice it closed right on these previous closure highs, which kind of tells you that we're still at a bit of a resistance on this market, but not too bad for the US 2K. The Qs started to weaken, actually. They didn't make a new high. They didn't even get close to the new high. They got the gap fill, then started to sell off. So 20 moving average on the daily, something to watch here on the Qs. And as we've already reported before, the Magnificent 7, or Mag 6 really, we should really take Tesla out of this, has started to consolidate. Really not doing much for most of kind of like the 5th of Feb onwards, so not doing too much there. Now we move over to the S&P. As we've mentioned, this is a very important market level, 49.95. And as you can see here on the daily, we found some selling. So of course, we know that this is a very important peak for it. We know 49.95 has at least some kind of support level. So buyers come the Monday might be trying to get something going on there. But if we do end up breaching under 49.95, it exposes further selling, 49.20 to 48.80 being the swing level for this market. And weekly closure ended up coming in at a nice looking wick, but of course not a green candle. So very important seasonal period here. I think NVIDIA is probably going to be the catalyst this week, along with the FOMC meeting minutes, which happens on Wednesday. Bitcoin market's still holding up. As we've mentioned before, this is kind of our TP zone, which is around that 50,900 to 51K. And it's done a little bit better than that. We've got Bitcoin halving coming up, which obviously has its own seasonal events. We'll talk about that and ETH-BTC moving forward. So we won't do it just yet because we had so many other things to cover, including SMCI, but stay tuned for that one. For the week ahead, we have quite a lot of information, but really it's in earnings and NVIDIA. FOMC meeting minutes, 2 p.m. New York time. So remember that. That's going to be a fairly volatile event. This is all the stuff coming out of Eurozone. And then we have PMI, flash services, and unemployment claims on Thursday. Bank holiday on Thursday as well for Japan, but notably, the biggest thing here is NVIDIA earnings, and we will need to keep absolutely in tune with that because it's going to be a very volatile event. I still cannot remember seeing $1 trillion stock with a plus minus, what was it, 12 or 14%. That is just going to be so wild. Thanks so much for watching. If you enjoyed today's show, remember to subscribe, smash that like button, and we'll see you in the next one. Bye for now.